Why are all the headlines about inflation? Why is it so darn important, and what is it? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. We're going to dive into those interest rates first. Pretty terrible week for interest rates. Week over week, up over a quarter, up to 6.92 according to Freddie Mac. You can check out the link below to see the historical average week to week and over decade to decade. Now, if you look over a 30-year period, we're still in a pretty darn good position. If you look at over a 10-year period, we're hitting those highs, right? So that's where we're at today. What led to this increase in interest rates? Well, one of the data points that came out was the CPI, or Consumer Price Index, which is basically inflation. What is inflation doing? Why is it so darn important, right? So that's what we want to talk about. Well, the Consumer Price Index is basically a basket of goods or services, and they look at it from year to year. They look at that price. If you've got this basket, and you've got all kinds of different, things in there, milk, eggs, whatever it may be, and it cost $100 last year. Well, $100 in September last year now costs $108.20 September of this year. That's right, up 8.2%. So those numbers just got released. It's mid-October. We saw the September read for the CPI up 8.2. The expectation was going to be up 8.1. So we were a little higher than we expected. Now, the only good news that I could kind of turn away from this is that last month we were at 8.3. So we are down just the slightest bit. But what this shows is maybe we've peaked, maybe we haven't, but we've kind of stabilized at these continue high numbers on the cost of these goods are continuing to go up, up, up. So why is this important? Well, this is the key metric that the Fed is watching for if they're going to increase interest rates. If they continue to increase interest rates at this large scale that they've been doing in the past, we're going to likely see mortgage rates continue to increase. We could definitely see higher rates in Q4 before they'll likely start to slow down and go and decrease in 2023. We've already seen articles, and I've talked about this on the channel before, Fannie Mae suggesting that rates will be at 4.5% to 5% by summer of 23. So obviously a stark decline from where we're at today. Now, what's gonna come up? What's gonna actually make that become a reality? Well, we've got to get a hold of inflation. We've got to see those inflation, the Consumer Price Index numbers start to come down, which will then tell the Fed they don't have to raise interest rates as fast as they have, and then mortgage-backed securities, the mortgage market, the real estate market is going to pay attention. We're going to likely see those rates start to come down. So this really is one of the key metrics. Put a spotlight on this. If you're looking at buying, trying to understand where rates are going, this is a key metric. Check out this chart. I will link to the article that I found it in from CNBC. So credit to them. Awesome chart here. And I'll put a couple arrows up on just some different categories that I thought were super significant to see these increases and a few decreases in terms of the Consumer Price Index. So you can kind of see from top to bottom, we're continuing to see just a ton of increases in terms of price, right? So that is absolutely one of those things we need to keep an eye on. Now, I'll summarize this whole, hey, we've got to keep an eye on inflation, we're not sure where things are going conversation with, if you're renting right now and this market is scaring you, well, 10.6% is a number I want you to think about. And that is from the chief economist of the National Association of Realtors said, rent year over year is at 10.6% annualized. So you're likely going to see rent continue to go up and up and up from here. So you can't really avoid it. You're going to have to live somewhere. So if you can find a payment and own a home for maybe less than what that rent is, that's now a fixed payment. You're likely not going to see any increases, right? Maybe taxes and insurance change, but that's a fixed payment. Next year, potentially when rates are lower, you could actually lower that payment down. I bet you that landlord is not going to be decreasing your payment by a couple $100 next year. When you're a homeowner, you have the ability to refinance. When you're renting, you're paying someone else's mortgage, right? They can refinance and then save that couple $100, but you're going to be likely paying the same. So is it a good time to buy if you already own a home? Well, in my mind, and I did a video before, so I won't go back over it, but I will link above, is that you know, you're likely going to be able to get a price or get a home for a good price, you know, be able to come in under asking price, be able to not have to waive contingencies and things like that. So again, I won't go over the full video, but check it out here below, or check it out here above. I'll link to it. But really, inflation is that key metric that I want you to keep an eye on. If you see in headlines, that is something that this entire market is really focusing on moving forward. So my name is Ryan Skaggs. This is the Mortgage Minute. Thank you so much for tuning in. If you made it this far, make sure and click that subscribe button. Put your comments below. Stay safe, and we'll see each other again very, very soon.